Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you the end of the week update here, as we always do every Saturday, but we record this on Friday, of course. But we're recording it pretty late, so it might be Saturday by the time we finish. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So we'll go through the portfolio real quick here. The portfolio at the end of the week closed out at $11,372.86 for the week. We are down $10.39, down 0.09% on the day. For the 1 week, we are up $82.67, up 0.73%. For the 1 month, we're up $87.77, up 0.78%. For the 3 months, we're up $525.16, up 4.84%. For the 1 year, we're up $1,712.98, up 17.73%. And for the all, we're up $2,301.33, up 25.37%. And that is the portfolio. So we did make 2 purchases today. We did finally get TD, which is Toronto Dominion Bank. Ticker symbol TD. We bought 2 shares of this. We now have 12 shares that holds 10.81% of the portfolio, which is over that 9, which is great. Average price of getting in is $89.54. Total position value of $1,221.48. If we go down here and take a look, the position that we bought, of course, is TD. We increased the position by 2 shares and an average price of $101.57. Coming total of $203.14 Canadian. The next one we purchased for this week is an index fund, which is VFV, the Vanguard S&P 500, closing out today at $99.99. You can buy fractional shares of this. It was up $1.04 today, up 1.05%. It holds 2.44% of the portfolio. Average price of getting in is $99.87. We own 2.7533 of a share of shares. And if we go down, we did a fractional buy of $25, got 0.251 of a share at 99.5854, which came to $25. Now every week we do purchase a fractional share of VFV, but we'll continue to do that until the end of the year and see how things perform. We currently have $76.18 in the cash account. These 4 are on my watch list. And yeah, I think it was a pretty good week. After last video there on Wednesday, things started to turn around, which seems to happen when I talk about the doom and gloom of things. But yeah, that is the portfolio. So we'll head over to Track Your Dividends to update things here and show you guys where we're at. So last week, well, today, if we didn't update anything or didn't purchase any positions, our portfolio would be closing out at $11,047. But we did increase positions. So today, if you were to build the portfolio, you would have a 3.43% yield with today's positions. Yield on cost is 4.35% because we continue to dollar cost average in, regardless if the market is down, up, mid, round, square, whatever it may be doing, because we never know these days. Annual income sits at $379 a year without doing anything, and that is just paid out to us into the tax-free savings account, cash account, where you use that money to reinvest into dividends, or not dividends, into positions to increase your dividend amount. So if we head down to TD, 10 shares, but we're going to increase that right away here. So the ticker symbol for Toronto Dominion Bank is TD.TO. There it is. We bought 2 shares of that, and we purchased them at $101.57. Add that holding, and that is added. And then we'll go ahead and add VFV, which will be ticker symbol VFV.TO. There it is. We bought, how many shares did we buy here? Let me pull it up. Bought 0.251 of a share, cost basis of 99.5854. Add that holding. And boom. So things have changed. Portfolio value coming in at $11,276, up $2,337 since starting the portfolio. Dividend yield, if you were to build the portfolio today with the updated positions, is 3.43%. And our yield on cost is 4.32%. Annual income has increased to $386, which is great. If we scroll down here, go down to TD, you can see it is now paying a dividend per year, paid out on a quarterly basis. If you divide that into four, $42.72. And the S&P 500, which is $3.11. Now that I do believe that is paid out quarterly, I'm not too entirely sure, but I'll check on that. You can see the dividends that we're expecting for the month of March coming in at $47, and next month 26 and 24 for May. Just glad we're over the average of $20, and we'll continue to grow that over time. So speaking of TD, there's a little ad for you. Everyone's doing it. It's your turn for their own self-directed investing account. But we'll close that out, and that is trackyourdividends.com. Just use it to track your dividends. The next thing we'll go to is Sharesight. Sharesight is a site that I use to track the performance of the whole portfolio within this calendar year. So all the positions are updated, as you can see, in this calendar year. 12 shares of TD and 2.7533 shares of VFV, which is the S&P 500. As you can see here, we are on a good trajectory, I believe. Capital gains of 1.94% of $214.82. Dividends of $79.95 this year, up 0.72%. And the currency gain down $5.91, down 0.05%. But our total return this year, total performance this year is 2.61% with a total return of $288.86. So we use Sharesight for this. TD, I don't think we're doing that too hot in it right now. If we go to it, okay, we're not doing bad. Total return this calendar year is 2.83%. So it's holding up its share in the work. But yeah, that is Sharesight, just keeping track of the performance for the year. And then we're going to talk about Bank of Canada, which sits at but the inflation currently sits at 5.7% as of February 2022. So it has gone up. I do believe last time we looked was 5.1, 5.2 in that area. So it has gone up a little bit there. Policy interest rates, looks like they increased it 0.5% on March 2nd there. And prices are continuing to rise when it comes to consumer spending. And it's really not gonna, I don't know if it's gonna trim this down or hold inflation back. Inflation's been happening since forever, and our money just keeps on losing less and less value. And I think that's the most important thing. So if inflation's at 5.71%, one of the things that we really have to understand is that we have to learn how to increase our income, lower our expenses, or find ways to continue to purchase assets, whether it's in companies, whether it's in real estate, in whatever that may be, that can generate some more income for everybody. And the reason we want to do that is so that we can keep up with inflation on our own and not be too concerned about it, because it won't affect us that much. And of course, it does affect everybody equally. However, if we continue to buy stocks that pay dividends, we have to understand that these companies grow regardless of inflation. Now, some may not grow because the capital required to continue forging forward with some companies just doesn't last, and then it just crumbles, and then there's nothing left. And so it's always good to think about some companies that continue to show growth, that are mature companies that have been around for quite some time, but continue to use capital to grow and help our investment grow over time, so that when we do need it, we can use it and it's still worth what it's worth. And now that can be the same thing said for real estate. Now, I don't own any real estate as of yet, but it will be something in this year that I want to complete and really just start stacking up the portfolio with all sorts of investments, not just stocks, but real estate, maybe a little bit of crypto, which I have a little bit of, not too much, not enough to talk about. but we do have a lot of shares, a lot of company stock, which pay out dividends, which show growth. I do work a regular 9-to-5 job, and then I do have a little bit of side hustles, as we call them, or side gigs that create just a little bit of income to even things out. Now, I know it does require trading time for money. However, you got to do what you got to do until you get to the point where you don't got to do that anymore. And so it's just something to think about. And I really want people to really think about this. Inflation is going up, interest rates went up. And if interest rates go up and you have debt, it's probably a good time to look at that debt and maybe pay it down, but as well at the same time, learn to purchase assets like company stocks. Now, not speculative stocks, but again, like I said, matured companies that maybe pay out a dividend or have a really strong growth trajectory at this time. And yeah, I mean, first rule, I guess, as we all know, as we hear it all the time, is never to lose money. And the second rule is to refer to the first rule. Famous quote from Warren Buffett. And please, let's not quote any more of Warren Buffett, because we do hear it a lot. And I'm sure he is just an example for everybody. So yeah, that's pretty much it for the week, guys. Hopefully you guys did enjoy the video. Don't forget to leave a like, subscribe, and have a great weekend. And we'll definitely see you in the next one. Bye.